2 units in June 23, and rest of the 6 units will be commissioned one by one by end of March 24. This monsoon has impacted the project, but we will make up the delay on account of this monsoon.
Right.
And Parthi 2, we are planning to commission fully in the month of December 2023.
Right. Many thanks, Mr. Goyal, for speaking to us and telling us about how the quarter went by. Pleasure speaking to you here on ET Now. But viewers, as you all know, today is Friday. So that's Buy Now, Sell Now Pathshala Day. And among many buzzwords this year, there's been one that managed to spoke and create volatility, which is Fed.plot. But what exactly is Fed.plot and how should one read it? Kunal simplifies it for us. Over to you, Kunal.
Thank you so much for that, Adiraj. And today's topic is, of course, on Fed.plot, a very interesting topic which has actually been, a topic which has been more of a global front, and of course, not widely understood from a local perspective. So today we'll just try and simplify it with very important slide for Fed.plot. So what is Fed.plot? It actually shows the projections for the Fed funds rate going forward, and that's on basis on every year, 2022, 23, etc. The FF rate, that's the Fed funds rate. It actually affects the monetary and the financial conditions. So it's a very, very important rate. We of course know that with the rate hikes which have happened over the last year, this calendar year, in fact, it's impacted most of the financial markets, not just the US markets, but it's sent through ripples across the globe. So what exactly is the Fed.plot? We'll go into the chart perspective. This is actually the how the Fed.plot works. So the team of the entire Federal Reserve, they come back and they manage to show a projection on individual basis of how they would probably project the rates going forward. So this, for example, was September 2022, where the expectation was that the Fed.plot or the rates for the FF rate would be closer to 4.25 approximately. Going forward 2023, 24, 25, and in the long run, that's what the projection is. Now, how do we simplify this chart? The simplest way to try and look out for is the median of this particular Fed.plot, which means that this is the data point which actually acts as a median, which means expectation is that by the end of 2022, we could be looking at 4.25 approximately as a median rate for the median FF rate. 2023, the median rate is somewhere around this particular mark, which means the rate hike going into 2023 would slow down significantly. Come 2024, the median rate would be just around this particular mark. 2025, the median rate drops down to almost this kind of a level, and in the longer run, the median rate would drop down to this kind of a zone for the Fed.plot. So this is how it's a dotical representation of how the rates would probably move on going forward. So this is a very interesting phenomena, something which I think a lot of the global economists, etc., are also following.
Right. Thank you so much for that, Kunal, actually, for deciphering what's the Fed.plot, and given the fact that we have so much of importance on what is happening with the Fed rate hikes and how should you anticipate it. But one good news or one silver lining right now, what we've all seen is the fact that US CPI inflation has come in lower than estimated, which means that the rate hikes that the Federal Reserve has undertaken has started to work, and all hopes that the rate hike quantum will start reducing going forward. But on that note, let's slip into a break on this edition of Buy Now, Sell Now. But let's take note of what the flashes on the bottom of the screen are. And it's quite a crucial one, given the fact that the policy that China had adopted, the zero COVID-19 policy, a stringent one, and they have gone ahead and cut the quarantine for close contacts. They've scrapped the flight ban. And also the other quarantine measures is the fact that they've cut the quarantine for inbound travelers to 8 days from 10 days. And on the back of that, the Chinese markets are reacting. They've seen a further jump, as well as crude, because now you will have more demand. So the crude prices have rebounded by about 1%. But let's slip into a break now.
co-powered by OLX Autos. Only.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you will be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
We could remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further than the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is the नास्तिक है उसको आस्तिक मत बनाओ समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and it's a good Friday. That's how it's turning out to be for the markets. And we have our experts today. We have Kunal Bothra as well as AK Prabhakar joining us on the show. A very good morning to you once again, Kunal, and a very good morning to you, Mr. Prabhakar, as well. And Mr. Prabhakar, yes, the market is definitely rejoicing what's happening globally as well. We're seeing a mirror effect of the US market surge. But in this environment, I know a lot of investors would be really happy. But what caution and what precautions should they take in order to keep their wealth intact?
Good morning. See, we need to understand, only limited sectors have been driving the market. No, and it is not of overall participation. We are almost near all-time high, but we have IT, pharma, and many other sectors which are at 52-week low. So, no, it is not something, if we are not in the right stock or the right sector, we might not make money. Maybe in the next 6 months also, I feel this selective performance will be there. So, banking and NBFC has been the outperformer. Defense theme has played out well. Now, hotels and retail segment has done very good. Capital goods. So, hospitals and real estate also are starting to perform. So, if we are in this sector, we would make money. But if we are in the IT or other sector, so we need to understand the cycles. Metal is not performing. So, we need to understand the cycle and be in the right sector to make money. It is not that, everything is moving up. It is not happening. But today, for a change, HDFC group has started to rally, which will give smiles to a lot of investors because they are invested there.
Right. Thank you so much for that perspective coming in. But with that, we start our query segment. Viewers, as you all know, this Buy Now, Sell Now is your one-stop destination for all stock-related queries. Shoot your questions to us. We are live on Facebook, YouTube, and the number flashing on your screen via WhatsApp. But with that, let's start. Kunal, coming to you first. Chaitra is writing to us from Bangalore. She's saying she's holding 400 shares of Hindalco at 405. She's asking what shall she do, book profits or wait?
I think you should hold on to your stock, hold on to the stock as such. I would probably believe that 440-ish could be a decent short-term target. So maybe a 435 to 440 range. That's where you can look to start booking our profits. Metal stocks are making a comeback. In fact, most of the metal names, I think if I'm not wrong, JSPL, SAIL, Tata Steel, they've all delivered numbers for themselves. And even after bad numbers, these stocks have actually not corrected sharply and they've made a good comeback for themselves. So that indicates that the participation is increasing for metal stocks overall. So it could be a matter of time that Hindalco also retests the 440 mark. My longer term targets are much stronger, much higher than the 440 levels, but short term wise, you can look to book our profits between 435, 440.
Mr. Prabhakar, I have a next question for you, and I believe it is going to be a little tricky one, and this one is coming from Satya, and he's asked about two stocks. One stock which has only surged and one way higher, and that is Indian Hotels. And the other stock that he's asking about is Zomato, which is only seeing a spurt in today's trading session because of the fact that their earnings are much better than estimate. He wants to know, among these two counters, which one is a better one for the medium term?
Zomato still makes loss. I don't know when they will make profit on a whole basis. But Indian Hotel is far better. And next few years they will have more than 29,000 rooms. Yesterday they gave a presentation. In the result update they have given. So now almost they have 21,000 rooms. So it will become 29,000 rooms. So if you are a long-term investor, Indian Hotel is my preference.
Kunal, this one's for you. So Brother Mukherjee is writing to us. He's asking your perspective on Polyplex Corporation.
So I think we discussed Polyplex some time back as well. Maintain the stance that it's not a stock which is looking extremely attractive on the charts, but maybe about the 1900 or 2000 mark, 1950 to be precise, could be a point where you can look to buy. So if you are looking to add or if you're looking to buy the stock, I would believe 1950 plus could be a level where you can look to buy.
Right. This next one is coming from Maleshwar Kunal, and he wants to know about Parag Milk and Bata, whether he can buy these counters at current market price as a short term.
So Parag Milk, yes, I would believe that the stock has formed a very strong bottom at the 70 or sub 70 mark. The low, I think, the stock had made in the month of June, July. So that's a reasonable support for the stock, and I think any dips maybe closer to that 100 mark or say 75, 80 odd mark for Parag Milk should be taken as a good opportunity to buy. Bata India would be a bit of a slow moving stock, so you would require to have a higher time frame as well as a lot of patience to try and buy the stock and expect decent returns over the near to medium term. If that's the case, then I would suggest a buy on Bata.
Right, Mr. Prabhakar, this one's for you. Ghosh is writing to us from Delhi. He's asking Piramal Enterprises and Pharma, is it a good time to buy now? He wants to invest.
I think, Piramal Enterprises, the result was disappointing. Even Piramal Pharma, it was disappointing. So I would suggest, wait for a few weeks where, let the stock, come down and then you can buy. But, Piramal Enterprises, I think, they have a stress in their asset quality. So I would say, avoid. Piramal Pharma, yes, if it corrects another 15-20%, it will be a right time to buy.
Right. Kunal, this one is for you, coming from Manas Gore, and he's saying that he has Torrent Power shares purchased at 503 and Laurus Labs at 457. He's asking whether they're worth holding for a period of about 1 to 2 years.
Well, absolutely, yes. I think both these stocks, so Laurus Lab apparently has underperformed, but then when I look at the recent last 2 years of history, the stock had done reasonably well. So, and now it's getting into a zone where the correction is a bit oversold for Laurus Labs. So the potential of a bounce as well as a rally from here could be stronger for Laurus Labs. Torrent Power apparently has been one of the calls which I had suggested, I think, a week or two back, more on a positional basis. I'm expecting a big turnaround into the stock. So if you ask me from current levels, I would definitely suggest a buy as well as a hold for Torrent Power. And specifically, if you have a medium to long-term time horizon, that's beneficial for the stock.
Right, Kunal Mahalakshmi is writing to us from Hyderabad, holding 100 shares of Avas Financials at 2,800 since 2 years and saying it's in loss. May he shift or may he average? Please advise.
You may look to average, but I think you can just wait for maybe another week or so. The stock has, for the first week, shown a very good recovery after, I think, 5 weeks of drubbing. The stock had seen from 2,250 to almost 1950 odd levels. So this is the first week of recovery. Let the next week also, the stock show some good credibility for itself. So if Avas Financials recovers to maybe say 2,100, 150 mark, that could be a point where you can look to average because the confidence could be a bit more stronger at those levels.
Right. Mr. Prabhakar, coming to you, Seema wants to know if CG Consumer is a good buy for a very long term. I don't know what her very long term quantum is, but how is CG Consumer to you?
We don't track the stock, but consumer goods, have not been performing. You take Voltas, Whirlpool, these sector has not been performing. So, but I have not tracked the stock, so I won't be able to.
Right. Kunal, Neil is asking us from Delhi that he's just bought 40 shares of Varun Beverages and he's asking whether he should average right now.
In fact, over the last 4 or 5 days, specifically, I've been advocating not to buy the stock, even though it's at a 52-week high or a fresh high for itself. My clear reasons for that is there's been a huge divergence for Varun Beverages in terms of indicators. The volumes have topped out, and the stock has corrected from 1,200 levels to now 1125. So I would probably be of the belief that if you're making even small profits into the stock, you need to have a trailing stop loss and get out as quickly as possible.
Right. Actually, a lot of short-term queries, and actually off-late we've been getting a lot of short-term queries. So Kunal, let me throw this to you then. This one's come from Manish, and he's asked about 2 stocks as a contra buy. One is Campus Activewear, and the other one is HDFC Bank for the at current market price for the short term. Can I answer HDFC Bank on your behalf by any chance? Because I know it was your one of your picks this morning, isn't it?
Absolutely. So there are times when we bet on the horses, the ones which are performing, and there are times when we bet on the underperformers. Today was the day in the morning where we betted on the underperformer HDFC Bank to try and get back into the line of outperformance. So it's doing exceptionally well for itself, and that's the quality of having a large cap stock and probably timing it pretty well. So I would still suggest a buy on HDFC Bank at current levels. Now, of course, my initial targets were just about 1,600, so you need to have a higher target as well as a higher time frame for HDFC Bank if you're looking to make money from current levels. Campus Active, on the other hand, it's come back into an oversold territory. 490, 495 is where the stock is trading right now. RSI seems to be oversold. Good time where you can look to have a contra bet.
Right. Kunal, another one for you. Swati is writing to us, holding 100 shares of Data Patterns at 1,350. What should her short-term target be?
Maybe 1420, 1440 could be a good target range. That's where the initial supply has emerged for Data Patterns, I think, in the last 1 to 2 weeks. And that's where the stock has been taking a bit of a resistance. So it always makes a lot of sense to book out at a resistance point and then look to buy back once the stock establishes a strong support zone. 1300 is a very strong support for the stock.
All right. This next query that I have is coming in from Hemanta And this one is for you, Mr. Prabhakar. In NTPC 100 shares at a price of 178 rupees per share. Wants to know whether it can average right now, and also wants to know about the medium to long-term view on this counter, and wants a target as well. If you could help with the target, would be great. But otherwise, how does the NTPC look over the long term?
See, power as a sector, there is a big re-rating. So I think, that is one segment which will have very good growth in the next 2-3 years. So nothing to worry. If you like to average, you can average, or if you want to hold on your existing portion also, you will get a better price. I think all-time high is possible in this stock. So NTPC, NHPC result also came. That was very good. We talked about Torrent Power. Result was very good. So I think power as a sector is something I'm looking for next 2-3 years.
Right, Mr. Prabhakar and Kunal, please stay with us. We're slipping into a very short break, but viewers, don't go anywhere and keep your questions shooting. We've got our query segment and the rapid fire after break as well.
Most market anchors.
Stocks open sharply. The Nifty Bank Index is down momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in ET Now.
We are trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Is it overvaluation case?
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
If the normalization in the world will happen, demand which in a sense got destroyed will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
For long-haul FII who looks at India as still a promised land for consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
But I always used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में, वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes, you don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth?
Just clarify this entire case.
What is it going to mean for the business?
What else are you looking at?
It was clearly one of the biggest deals.
Here, ET now have been getting you bit by bit.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and we will continue with the query segment. And let's take the next one. And this one is coming in from Jay Krishnan from Kerala and wants to know at what levels can Jay Krishnan enter UltraTech, Kunal, for the medium term, and wants to know if this is the best stock in the cement pack.
Well, UltraTech, of course, is a more formidable stock. Of course, there would be best stocks in terms of returns, which can do pretty well. But when you're running a portfolio, you can't be looking out for just the best stocks. You have to look out for the best quality stocks in that regards. Now, UltraTech Cement, of course, is a stock which falls in that category. I would believe that, it's forming a huge pattern of an inverted head and shoulder on the daily as well as on the, monthly charts. The breakout of this pattern is just about the 7,000 mark. So if you ask me in terms of timing, a much better time to buy the stock would be just about the 7,000 mark. When this pattern gets completed, that could potentially lead to a huge breakout for UltraTech Cement.
Right, Mr. Prabhakar, coming to you now. This is going to be a big one. Anand is writing to us from Dubai. He needs a view on Nykaa as the stock seems to be going on a downside. He bought this stock at 1,543, but it's been on the downside ever since. Now with the bonus shares, the market price has also been revised. He's asking if there's any chance for it to rebound in the next 3 to 6 months.
These new age stocks, there are many misunderstandings with the retail investor. See, for the kind of valuation, I don't think they are making decent profit. So I think there will be high volatility till next 2-3 years. So if you are a long-term investor, it is okay. 3 to 6 months, I think because of the bonus shares, people might not sell it. So you will get a rebound. That is the best time to exit the stock if you are a very short term. 3 to 6 months is a very short term goal.
All right, the next query that I have is coming in from, and this one I believe is from Sagar. And Sagar is asking about, Sagar was asking about Oracle Financial Services. He's saying he's bought 1,500 shares at a price of around 2,950 levels. Kunal, this one is for you. He's saying that he's seeing a reversal in place as downside is pretty much protected by dividend yield and okayish earnings. But he wants to know if you can see 3,200 plus as levels for this one.
See, it's possible now with the IT revival and Nasdaq making a comeback. I think there's always a higher possibility that these mid-cap IT stocks, IT enabled services stocks, they could also make a strong comeback for themselves. Now, what we need to categorize, of course, is the leaders. Now, over the last few days, I've been mentioning that the likes of HCL Tech and Infosys, they should lead the rally from the front, and then it would be followed by mid-cap names. You can look to bet on OFSS, but it may not be my first choice when I would look at the entire IT basket. A possibility of 3,200, and I would probably sense that even a possibility of a retest of the 200-day moving average for OFSS could be a high probability, which is at 3,300 mark for the stock at current levels.
Right, Kunal, for you, Simran from Chandigarh, she is holding ICICI Bank, 250 stocks at 902. What should she do in the medium term?
You should definitely to hold ICICI Bank. In fact, dips, when you get a 5% to 7% kind of an average dip for a stock like ICICI Bank, it should be taken as a very good opportunity to buy. My belief is that the bank Nifty and the banking stocks are going through a different league of a trend for themselves. And it would be very, very unlikely that ICICI Bank remains to be an underperformer for a long period of time. So the stock would get back into the line of outperformance. I would suggest a hold.
All right, let's take the next query then, and this one is coming in from Akash, and he wants to know about, you just spoke about ICICI Bank, right, Kunal? So yes. You had a question on ICICI Bank. So let me take this one from Tripta. GNFC is something that she's looking at. She wants to buy at current market price. Do you think it makes sense?
Yeah, I think it's been a good stock, GNFC, but apparently the last 2-3 months the stock had gone through a bit of correction. Now it's always better to try and buy the stock when the stock enters into the oversold territory. I would still sense that maybe it's a week or two away from the oversold point for itself. So better entry point for GNFC would be just around that 550 mark for itself. So you may possibly wait for another 10 to 12% downside, and then you can look to buy.
Kunal, for you, Sudesh from Kerala is writing to us, wants to know the entry point for Eicher Motor. My apologies. Mr. Prabhakar, this one's for you. Sudesh is writing from Kerala, wants to know entry point for Eicher Motor for a long term of 5 years.
I think 5-year investor should not worry about the entry price. Current price also is very attractive, and any 10-15% correction, if it happens due to some reason, then it will be, you can add more.
Right. Okay, this one is coming from Madhuri Kunal, and she wants to know at what level can she look to average Jubilant Food work. Though she's not given me her buy price, but she's definitely has mentioned that she's currently in 15% loss on this counter. Or do you advise that she holds on to it?
So I would sense that the buy price would be closer to 620, 630 mark for Jubilant Food. It's a decent stock. I would still say that I think the last couple of days the panic or the sell-off has been quite steep for Jubilant Food, but I think that's happened for most of the other names. I think, if I'm not wrong, Devyani International, Barbecue, etc. These stocks have also gone through a correction for themselves. Now, Jubilant Food apparently has come back towards its 200-day moving average. So I would look at it this way, that it's going through a mean reversion phase. If you can probably look to average the stock, say maybe closer to 530-40 mark, that could be a point where the probability of you coming back into profits would be far more higher. So I would suggest to hold on and possibly add on if the stock dips towards 530.
Right. Again, another question for Kunal. Raj from Maharashtra, holding AB Capital at 170. When should he be averaging?
So I think I've been advocating AB Capital a week or two back when I had mentioned that the stock is on the verge of a bigger breakout for itself. It's done reasonably well from 110.15 to 130. Now, if you've bought at higher prices, it always makes sense to average it out at those crucial breakout points. I would believe that if you can possibly average, assuming if the stock comes back to sub 120 mark, and then hold on to it for at least another 3 to 6 months.
All right, with that, let's kick start with the rapid fire then. The first one is coming your way, Kunal, is from Ravi Chandran. He's writing to us from UAE. 1,400 shares of JM Financials are 76 rupees per share. He's wondering whether he'll get the target of 85 to 90 in the next 4 months.
I think there's a high probability. I would suggest a hold.
Right. Sameer is writing to us from Bangalore, wants to buy green energy stocks except Adani and Tata, which is good for the next 10 years. Mr. Prabhakar?
NTPC is one more good stock.
All right, this one is coming from SA, wants to know about BEL. He's holding 900 shares at a price of 105. Hold or sell, Kunal?
Hold.
Right. Anand then from Gurgaon, 300 shares in Nerolac Paints at 480 per share, currently at 6% loss. Should he hold for 6 to 9 months or exit and move to Berger Paints or Asian Paints? Mr. Kunal, this is for you.
I would suggest a shift towards Asian Paints.
Okay, Akash has KPIT 605. He wants to know whether he should book profits. And you also have Mr. Kumar, who's also holding KPIT with an 18% profit. What should they both do?
I think we should definitely look to hold both of them. I mean, same stock, but for both of the queries, I would suggest a hold.
Right, Mr. Prabhakar, Salim is writing to us, holding Adani Wilmar 289 shares at 728 price, presently in a loss of 6%. What should he do, hold or average or sell?
It is a very good stock, hold.
Okay, we have Sharana Basava, who's asking about Coal India, whether it can be bought right now, Kunal.
Well, you can look to buy, but I think 240 could be a better price if you're looking to time it properly.
Right. Neha from Kolkata, have Tata Chemicals since it was 910. Considering its downtrend, should I hold it or should I sell? For you, Kunal.
I think you should look to hold.
Okay, Shobna is asking about Page Industries. What's the entry price? She's saying that it's always high. What to do?
So, 46,000 could be a very good point for Page Industries if you're looking to buy.
Right, Mr. Prabhakar. Manik Kandan is writing to us from Kerala. He's asking whether he can buy ACC at the current levels.
I think cement stock in a bad time, we can buy it.
All right. On that note, thank you so much, Mr. Prabhakar and Kunal, for joining us on the show. Kunal for explaining our viewers a brand new concept on Pathshala, and Mr. Prabhakar for resolving viewer queries. But on that note, before we slip into a break and bring on board our next management, we will take a note of what is flashing on the bottom of the screen, and that is the Mahindra numbers for you. And for now, the only numbers that we are getting is from the agencies. For now, the PAT is coming at around 2,090 crore rupees when compared to our ET Now poll of around 1,875 crore rupees. The revenue, if you look at it, standalone revenue on a year-on-year basis has come in at around 20,839 crore rupees versus 13,314 crore rupees. That is what the revenue is coming at. And like I mentioned, the PAT is coming at 2,089 versus 1,433 crore rupees is what the numbers are right now. That's the initial numbers for Mahindra & Mahindra that we are getting. And as you can see, the stock price reacting to those numbers, we saw a mild uptick coming in. Now it is trading higher by about 0.5%. But we will wait in for some more numbers for the Mahindra numbers. And right now, if you look at the numbers that we have, the poll that we have for revenue was 20,525 crore rupees, but it's coming at around 20,839 crore rupees. So inline set of numbers when it comes for the revenue, and marginally higher coming in for the PAT when you compare it to the ET Now poll. So that is how the numbers of Mahindra & Mahindra are looking for you. 0.7% coming in for this one. I believe we will try and connect with the research, with Shrishti from the research team to know more about the numbers for now. But let's move on and let's talk about the new listing for the day then. And we had DCX Systems that actually listed today, and it saw a very good listing, a bumper, or rather a stellar listing coming in for that particular counter, 40% uptick coming in at open. And we are joined by the management of DCX Systems right now. We have Dr. H.S. Raghavendra Rao, who is the chairman and the managing director of the company, as well as Mr. Shankara Krishnan Ramalingam, who is the whole-time director at DCX Systems. A very good morning to both of you gentlemen. Thank you so much for joining us on ET Now. And congratulations on this stellar listing that your company has witnessed on the Dalal Street. 110 crore rupees of the IPO proceeds will be used for repayment of your loans. What will be your debt position after that, and what will be the annual interest cost savings due to the repayment?
110 crores out of the 400 crores primary from DCX is earmarked towards repayment of bank loan. This will reduce the leverage significantly from about 4.52 times leverage in 2020 to about 2.5 times by November, December, and which is quite a significant milestone, because many years ago we used to have very high leverage ratios. And with the net worth position improving and the financial results are also improving, I'm sure moving forward it will be a significant contributor in terms of bringing down the leverage ratios significantly more, besides the 110 crores of reduction.
Right, a very good morning, gentlemen, and thank you for speaking to us on ET Now. This is Adhiraj joining in. I would like to ask you, of course, the repayment of your loans that you've mentioned will also improve the leverage capacity of your company and your ability to raise further resources in the future to fund your potential business development opportunities and to plan to grow and expand your business. Tell us about your expansion plans and guidance for the coming quarters.
Upcoming business plan, it is very clear, and we are going for a backward integration, for putting our own facility for enhancing our backward integration of PCB assembly. We are going for a PCB assembly. Also expansion of our existing business of cable and wire harness to be put it more. And also on the way coming out, we are working with a few technological company to acquire a technology for Make in India and Atmanirbhar program. So overall, you can see on the complete coming years, we have a clear plan to make a technologically sound, DCX one of the technologically sound on the defense and aerospace and the business. And we have clear roadmap for another 3 years for the the project, what we are implementing of the existing business, adding more backward integration of PCB assembly and the product activation, and expanding our cable and wire harness business. Also, we are going to put up some of the MRO facility maintenance and repair and overhauling. It is nature and business. We want to expand those areas, and very clear plan, and we are confident to take that forward. And some of the things are under finalization of documentation like a MOU or term sheet with a foreign OEMs. We are working on it until it is not yet materialized, and definitely we'll let you know on the upcoming days very shortly. Thank you. This is our plan.
All right. Thank you so much for joining us on the show, gentlemen, and a very congratulations to you and all the best for your onward journey on the last tree. That was the management of DCX system. But let's take a note of Mahindra numbers for you. We just had them flashing on the bottom of your screen, but let me get on board my colleague Shrishti to exactly tell us what transpired in the quarter gone by for Mahindra Shrishti, how are the numbers on the surface? Looks like an inline set of numbers?
Well, yes, inline set of numbers coming in from Mahindra and Mahindra. A bit of an outperformance coming in when it comes to the profit of the company. The company reported a net profit of over 2,000 crores, close to 2,080 crores, versus our expectation of 1,875 crores. On the margin front, they reported an EBITDA margin of 12% versus our expectation of 12.2%. And other than that, even the revenue and EBITDA number is as per our expectation. What the company has this time done is there is an exceptional item of 247 crores as well, and that is on the back of impairment provisions for the long-term investment and gain on sale of certain investments. But adjusting for it, the profit figure is a bit higher than what we were expecting. But the management commentary is also quite very positive, because this time around they say that their farm equipment has achieved their highest ever quarterly volume. As we know, the automotive segment was doing very well. The company says that the export for both the vehicles and tractors remain quite very strong. It is the highest ever quarterly revenue for M&M when we see on a standalone number basis, and the management commentary on the growth outlook ahead and the demand for both the segments stands to be quite very strong. So a decent set of numbers and a marginal outperformance coming in on the bottom line for M&M.
So much for that, Shrishti, for outlining how the numbers were for Mahindra and Mahindra. But let's bring on board our for the analysts who track Mahindra really closely, and we have Ashwin Patel as well as Mithil Shah joining us. A very good morning, Ashwin and Mithil, and I hope you got a chance to take a look at Mahindra numbers. Ashwin, I'll come first to you. How are the numbers and what are your views on it?
I think it was a good set of numbers from Mahindra and Mahindra this time, with both of its segments, that is automotive as well as farm equipment segments. Both of them have done well in this particular quarter. And we know that the second quarter is a good quarter for the farm equipments, with the monsoons and being there, and tractor sales also happening well. So the automotive division has been doing well with several launches. The Thar doing well, XUV700 doing well, and the chip shortage issue also getting reduced. So the company has been able to cater to the demand and the high order book that had been created earlier because of chip shortage. So the company has been able to deliver on that front as well. On the margins front, I would say that 12% is a good kind of a margin. We were also working in line with that kind of margin. So in-line numbers on that front. On the profitability, at the bottom line, I would say that the exceptional items, if you take it out, then the numbers were slightly ahead of our expectations. So on and on, I think it was a good set of numbers from M&M. And going forward, also despite the unseasonal rains that we have seen in the month of October, Q3 is going to be good. As we are seeing in the numbers, the volume numbers of the company, which are coming on the first of every month. So the outlook remains good, and we are positive on the stock.
All right, a good set of numbers. Outlook looks good, and positive on the stock is the word coming in from Ashwin. But Mithil, what's your take coming in on Mahindra, looking at the numbers? And do you see these numbers to sustain from here on? No doubt the farm equipment numbers were better, like Ashwin was also pointing out, because in the second quarter you also have the monsoon effect coming in.
Yeah, numbers are definitely very strong performance. Even on revenues front, it is slightly higher than our as well as street expectation. So margins are in line, but we should note that as a few days ago, competitor Escorts reported highly subdued performance for the tractor segment. So compared to that, this is a positive surprise, as in this case, company's FES segment, that is a tractor segment, EBIT margin has improved by 40 basis sequentially. It came close to 17% EBIT margin, whereas on the other hand, auto segment EBIT margin has also improved by 45 basis to 6.1%. So these two are not in line with the trend which we have seen for other companies, and this is positive surprise. On the bottom line, there is a significant jump in other income, almost 20% YOY increase and nearly more than fourfold on a sequential basis, primarily because dividends from the associates and subsidiary, which was last year 851 crore, this time it came close to 1100 crore. So major difference coming in terms of higher bottom line is primarily from the dividend income.
All right. Thank you so much on that note, Mithil, as well as Ashwin, for joining us on the show and giving us your first cut on Mahindra numbers. And it is a consensus view coming in, strong set of numbers coming in for Mahindra in the quarter gone by. If you look at, as per ET Now poll as well, the PAT and the margins were in line with estimates and revenue were a tad bit higher from ET Now estimates. But on that note, let me take a break on this edition of Buy Now, Sell Now. But stay tuned. There's some more lined up for you on the other side. Don't go anywhere.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you will be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely.